SCHD has now moved above $32 per share for the first time since 2021 and is up more than 15% in 2026. So the big question is, have you already missed the opportunity, or is this still a good time to invest? And if you already own SCHD, should you keep holding, add more, or take some profits? In this video, I'll break everything down using real data, not hype. We'll look at how SCHD's current price compares to its historical range, what's driving the recent rally, and whether it's overvalued or still fairly priced at $32. Then we'll dive deeper into the key numbers, dividend yield, valuation, and long-term performance to understand what this price really represents. Most importantly, I'll walk you through 5 simple strategies. Buy now, dollar cost average, wait for a pullback, take profits, or just hold your position. And at the end, I'll share exactly what I'm doing with SCHD right now and the reasoning behind it. By the end, you'll have a clear plan based on your situation, not guesswork. Quick disclaimer: this is educational content, not financial advice. Always do your own research before making any investment decisions. Let's get started. All right, let's start with the context. SCHD is trading around $32 per share in late March 2026. To decide whether that's expensive or reasonable, we need to look at its recent price history. Over the past year, SCHD dropped to about $26.80 in October 2025 and has now climbed back to its 52-week high above $32. That's close to a 20% increase in just 5 months. It's also near its previous peak from late 2021, which means the price is back around all-time highs. So what caused this move? First, investors have been shifting money out of expensive tech stocks into more stable, income-focused ETFs like SCHD. Second, expectations around interest rates have changed. With possible rate cuts ahead, dividend-paying stocks become more attractive compared to bonds. Third, SCHD's recent rebalancing strengthened the portfolio by reducing energy exposure and increasing financials, making it more balanced. So far this year, SCHD is up around 15%, outperforming the broader market, which is closer to 8%. This rally isn't random. It's supported by real factors. Now, the main question is, will this trend continue, or could a pullback happen next? Now let's look at valuation. Is SCHD expensive at $32, or still a reasonable buy? Dividend yield. At $32, SCHD offers a yield of about 3.3%, based on roughly $1.06 in annual dividends. Over the past 5 years, the yield has typically ranged between 3.2% and 4.2%, so today's yield is on the lower side. This usually means the price has increased faster than the dividend, making it less attractive than when yields were closer to 4%. However, yield isn't the full picture. SCHD's dividend has historically grown around 12 to 13% per year. So even if you start at a 3.3% yield, your income can increase over time, improving your yield on cost. Valuation, P/E ratio. SCHD's holdings are currently trading around 18.5 times earnings, compared to about 21 to 22 times for the broader market. That means SCHD is still cheaper overall, although not as undervalued as it was before. Price history. At $32, SCHD is near the upper end of its historical range, close to previous highs from 2021. That suggests it's somewhat expensive compared to recent years. That said, today's market conditions, like interest rates and inflation, are different, which can support higher valuations. Bottom line, SCHD appears fairly valued to slightly expensive. It's not a bargain, but still reasonable for long-term investors. Waiting for a dip to around $29 to $30 could offer a better entry point. Let me give you 5 simple ways to decide what to do with SCHD at $32. Framework 1. Starting from zero. If you don't own SCHD yet, Consider buying part of your position now and spreading the rest out over the next few months. This way, you stay invested if the price continues rising, while keeping some cash ready if it drops. Framework 2. Adding to an existing position. Ask yourself if you're comfortable with a potential 10% decline after buying. If yes, you can add. If not, it may be better to wait for a pullback. Smaller, consistent purchases often work better than large lump sums at this level. Framework 3. Income-focused investors. If you rely on dividends, focus more on income than price. Even with a yield around 3.3%, SCHD's dividend growth supports long-term income. Consistency matters more than timing. Framework 4. Waiting for a better entry. If you feel the price is high, consider placing a buy order around $29 to $30. Pullbacks happen regularly, but be aware you could miss the opportunity if prices keep rising. Framework 5. Taking profits. If you're up significantly, selling may be tempting, but SCHD is designed for long-term income, not short-term gains. Selling can trigger taxes and reduce future income. Bottom line, your decision depends on your goals, timeline, and risk tolerance. A clear plan helps you avoid emotional decisions. Now let me explain what I'm doing with SCHD at $32. I'm holding my entire position and continuing to invest monthly. Here's why. First, I don't try to time the market. I've bought SCHD at different price levels over time, and my focus isn't short-term price movement, it's growing dividend income. Whether the price goes up or down, the income continues to increase, and that's what matters most. Second, the fundamentals remain strong. After the recent reconstitution, SCHD is more balanced and better positioned for future dividend growth. The yield is slightly lower, but the overall quality has improved. My focus is on long-term growth, not short-term changes. Third, I'm not selling to take profits. Selling would trigger capital gains taxes and reduce my future income stream. I'd also need to find a better alternative, which isn't easy in dividend investing. Fourth, I continue investing consistently each month. Regular contributions help smooth out price fluctuations over time. The only thing I'm avoiding is investing a large lump sum at this level. For bigger amounts, waiting for a pullback makes sense. But for long-term investing, consistency matters more than timing. Let's simplify this with a clear decision framework based on your situation. Buy at $32 if you're starting from zero, investing small amounts regularly, or focused on long-term income. It also makes sense if you don't want to miss a possible move higher, and your time horizon is 10 years or more. Wait for a dip to $29 to $30 if you're investing a large lump sum, want a higher starting yield, or expect a short-term correction. This approach works if you're patient and okay missing some upside. Hold if you already own SCHD, are reinvesting dividends, and care more about long-term income growth than short-term price movements. Sell only if you need cash, are rebalancing your portfolio, or have a clearly better investment option. For most investors, selling isn't necessary. Bottom line, SCHD at $32 is fairly valued. Not cheap, but not overly expensive. Over time, consistency and compounding matter more than perfect timing. If the price drops, you can add more. If it rises, you're already invested. Stay focused on long-term dividend growth, not short-term price noise. What are you doing with SCHD at $32? Buying, waiting, holding, or selling? Share your plan in the comments and let me know your reasoning. I read every comment and respond with feedback. Subscribe if you want more real-time SCHD analysis and clear decision frameworks like this. Thanks for watching, and I'll see you in the next one.